long time. So we're kind of mixed since '68. Wow, 1968. I remember 1968. I hate to admit that, but I do. Losing for a long time. Well, William, we want to stop that. All right, great. So it looks like we have pretty good experience in the room. Um, and a long time for nothing. Okay. So let's take a look at what we do. And we'll start with our basic disclaimers, which you've seen numerous times. But just remember, this is a risky business, and many of you, I see from your responses, are well aware of that. But what we do is not easy, and there is the risk of losing money. We are a training group. We're not giving anybody any individual trading advice. We will show you what signals are, what you can expect from various signals, but all trading decisions, obviously, are your own. Now, we want to make day trading simple. Now, it's not easy, and I know that. So there's a difference between easy and simple. What we want to do is take all of our hard-earned training and come up with ways to simplify the trading process. And so that's what we're going to do. And the way to do that is we approach the markets as calculated. And that we believe the markets are calculated. And the real question is whether or not you know those calculations. And you'll see on our charts, we just have the charts. We don't have any lower panels. The most important indicator for what we do on the chart is price. And so we are price action traders. And the price will move in three directions: up, down, sideways. And we're going to measure those movements with a core strategy of wave to rate trading, looking at ABC patterns, and also at, which I don't have in here, 1, 2, 3s, and differentiating what those are. And then we always want to use, and Daniel mentioned multiple time frames earlier, we always want to use multiple time frames and higher time frame analysis to really get a better perspective and increase our odds of success on an intraday basis. Now, price moves in patterns and waves. And our core thoughts is that every pattern is going to start as a correction. And these corrections can become impulses, and we use calculations to determine when that happens. And that there are always minor waves inside of major waves. And then we're going to use multiple time frames to look inside those patterns. So we want to trade from decision point to decision point to decision point to decision point. And we're going to use calculations again, and primarily we're going to use Fibonacci levels to determine what those decision points are. And regardless of what time frame you are trading, whether you're trading a 5-minute chart or a 2-range bar or a daily chart, the higher time frame pattern is always critical. So if you're trading daily, that weekly pattern is going to be critical. If you're trading a 15-minute, we're going to look at 60-minute and daily patterns. It's the higher time frame that really allows us to anticipate where that next decision point is going to be. So first I want to just kind of look real quick at the system, and then I'm going to look at some wave analysis and how we use that. So I'm going to escape here out of this slide presentation, and I'm going to start with just looking at the NQ with this X90 wave rider, and I'm going to just kind of look at this morning. Now on this chart, there's a couple things to note. This white line here is a line that I've drawn in. I'll just remove it now, and later in the program we'll give you a link to come in and register for a trial for next week and the week following in the live room with the indicators and everything on your charts. But just looking at this chart, here's what we want to notice. First thing is we're using the Pure Logic, and these are programmed by Daniel, who was just before me, Ultimate Renko bars. Now, he's programmed them for us to be the X90 Wave Rider Renkos. I'll take that back. These are by Anthony at Pure Logic Trading, not Daniel before us. Daniel's done some bloodhound work for me. I apologize. But these are the same as those proprietary bars, and he's recoded them with our name and added this little reversal marker here to these bars. What these bars do for us is they clean up our charts so that we can see these patterns that we're looking for more readily. And then we've coded them to make certain calculations so that when you see a red background on these charts, our primary thought on these Renko bars is to the short side. When you see a green background, our primary thought is to the long side. Now you'll notice these yellow, green, and red candles. Our yellow and green candles here are simply triggers and alerts and setup candles. So what we would look for, and just disregard this moving averages for now, I'll tell you how we work those in. What we look for, as this price moves up, you can see it rotates right here and becomes green. At this point, we're waiting for a pullback. And then on a reversal, we're going to look for long signals. These entry candles give us an idea of how valuable or how good our odds are on these triggers. So you see this yellow candle, that's our initial trigger candle and setup candle. It's yellow, so we want to be a little more cautious here. That's a pullback, but if it's what we would call a minor pullback, and on a minor pullback, even if we go higher, it's more likely to be a minor higher high and then pull back again off the yellow candle. If we pull straight back to a green candle, that's a little bit better. We would call that maybe an intermediate, and we actually label these 1, 2, and 3, and we'll talk about that. But if we get a straight pullback to a green candle, that's also valid. Our best signals, we get a pullback to a yellow candle, we get a move back up, and then a pullback to a green candle. That's as good a signal as we get. Everybody with me on that? It's this ABC structure. Right here, that strengthens our signal. All right. Hey, Randy. Thank you. Where you been? Haven't seen you lately. Good to see you. This ABC structure, it's hard to quantify it, but I would say I like this signal twice as much as a straight pullback signal. Oh, I'm sorry to hear that, Randy. Hope you're feeling better. Hope we see you again soon. So those are the signals, and today you can see how that played out. If we take this early signal here, maybe we pick up a quick tick, but actually we're probably going to get stopped out on this trade. We don't give up. We get right back in the trade here, and then we ride that trade. Now I'm going to show you some parameters. On the NQ, we generally enter a trade with a 6-point stop. We have a first target at 3 or 4 points, depending. If it's off a yellow candle, we'll have a 3-point target. Off a green candle, we may have a 4-point target. We'll take the first target off. We'll get our stop to break even as soon as we can, and then we just trail 5 points until we're stopped out. Or, depending on the trader, we trade behind this band, and when we get pullbacks into the band and a reversal, we add contracts in. So we'll pull a contract off here. It pulls back in. We may add a contract. Better if that's a yellow candle. Today, that's how we would trade the NQ. We may or may not add in a contract here. We may just be trailing 5 points. That's up to the individual trader and what they're comfortable with. 6 points, Heinz. 6 points. Now, we're not scalping, and I know that, so 6 points, that's 24 ticks. That seems like a big stop to a lot of people. But we're trying to catch the bigger waves. We're trying to catch, on the NQ, we'll catch 10-point, 12-point, occasionally a 30-point, not that often, but a 30-point wave. Yeah, I wouldn't know about the brick bars. I do like these bars a lot. I think they work really well for what we're doing and cleaning up the chart. Now, these moving averages, and this is just a 62 EMA and a 377 or a 340, it really doesn't matter much, EMA. for our slow band. You can see they also offer additional levels of support and resistance. So when we talk about how here we rotated red, we're thinking about shorts. If we were to take a short here, that slow band is probably going to be my target. So that's going to be more aggressive. If I want to take a short, I'd rather see it pull below that band and then go. I'd rather see the fast band below the slow band. All of that still holds true. But our primary focus and our initial thoughts are green background, red background, green background. So long, short, long. Pullbacks to setups, pullbacks to setups. We use this reversal marker as our entry trigger. So as an example, now we're not in a short mode here, but if this was a short setup and I was looking to go short, we want price moving in our direction. My short order would be sitting right here on this marker. So that when I got short, and this is not a short setup, but just for when I got short, I've got price moving in my favor as I enter the trade. As opposed to just saying, I'm going to sell this level. I want price moving in my direction. Does that make sense to everybody? Okay with that? And I'll close this order here before actually getting the trade. We're good? All right. So that was the NQ today. In our room, we watched the ES, the NQ, the Russell, and crude primarily. We don't trade the ES a lot. It moves a lot slower on these 5-tick bars, but it is pretty profitable. Looking at the Russell today, the Russell was a nice instrument to trade today. Shortly after the open here, you can see we have this prices pushed up, starting after market yesterday in the overnight. We came into the market open on a nice pullback. Here's our yellow candle, then our green candle here on reversal. Entry would have come in right in this zone right here. Our first target on this type of entry would be 12 ticks. We trail 20 ticks or behind the band. Now, if you were trailing behind the band, you may have added in a contract here, and then both of them got stopped here, depending on how you were managing the trade, or you may have just been stopped right here and then made a decision whether or not you want to get back in. So the Russells moved rather slow today, but nice winning trades coming into the morning. Now you can see here we rotated red. There's a short entry there, there's a short entry there, and there's a short entry there. Notice we're above this slow band. If we're going to go short from above the slow band, that slow band's your target. Or at least a place where you tighten your stops. Does that make sense to everybody? For a reversal, on these bars, it's 200%. You can see this 5 ticks, 200% reversal. So what that means is price goes up, comes back 5, which is back to the bottom of the bar, and then it goes 5 more. So it's actually 15 ticks, ends up being about 7 bars. I'll show you where it is exactly. From this level low here, 1269.9, using a 200% reversal, 71.5 is where that entry would be, right there, if we were going long. So it's 1, 2, 3, 4, 5, 6, 7th bar comes in on the 8th. 1, 2, 3, 4, 5, 6, 7 comes in on the 8th. And you can adjust that reversal size, and you can adjust. Now I have it set, notice from 1271.70 to 1270, that's 17 ticks. This will reverse at 1270, or here it'll print when it hits 1271.7 here. Notice that's 16 ticks above what price currently is. All right, so it's 15, and then I just added one more tick. I could have it go, I can have it set to go wherever. I don't really change it based on market conditions because these bars, since they're price action oriented, if the market conditions are really slow, the bars just move a lot slower. So they kind of adapt to the market conditions. So I don't trade too much. You can, if you're really impatient, you want to trade more, you can go to a 3-tick or a 4-tick. If you want to trade less often, you can go to a 6-tick. For our purposes, we try and keep it really consistent in the room and trade by the same rules as much as we can, if that makes sense. We have done a lot of studies, and let me go back to the slide presentation here. Unless you have any questions on this, and actually let's take a quick look at crude, because I didn't trade crude today. I wasn't watching it very close. So crude really wasn't too good a trade today. It looks like here was a tough entry from underneath the band. So it just got to the band right at the entry. And we said if you're below the band and you enter, that might be your target. You see it rolled right back over. So really crude did not trade. They didn't get any entries. There was one entry right here. Other than that, we've not seen an entry on crude today. So very slow day on crude oil. Going back to the slide presentation here. Just real quick, and this needs to be updated. I've been on vacation, so I don't have the last 3 weeks in this results. I can tell you right now, this is at 39,000 here for the totals in that zone. And that will go out later this week. But this is through mid-June, and it started on October 22nd, last week of October. This is all of the signals we've got for what we call our level 3 entries. And our level 3 entries are those green candle entries with that ABC structure. We're looking just at level 3 entries since October in these 4 instruments. You can see the number of contracts we've traded, wins, loss, win percentage, average trade, and total profits. Now, we have, for our members, we've broken down everything into day of week and half-hour time periods, so that we can come into a specific day. And PW, I will get to that in just a second. Your question, in just a second. 30-minute windows, time a day, and here's the NQ. And I can tell you on the NQ, I believe this is on Tuesdays, and these are level 2 trades on Tuesdays. You can see during that time window since October how many trades we've had, wins, losses, and break-evens. Now these on the NQ, we trade all of these are based on 2 contract entry. We take the first contract off on level 2 trades on the NQ. We take the first contract off at 3 points, and we put the stop at break-even. And then we let the second contract trail 5 points until it's stopped out. And so that's what you can see on our various time frames, what we look at on the NQ. And it turns out the NQ actually trades much better early in the morning than it does later in the day. And that's not true for every instrument, but it's definitely true here for the NQ. Now we have those results. The previous results for the ES. Here you can see on this particular day, the ES a little bit more consistent in the afternoon, but we don't get as many trades on the ES as we do the NQ. On the Russell, I think this is Tuesday afternoons. I mean, not Tuesday. This is Tuesday level 3 trades, but you can see here on Tuesdays it's really right after lunch, and this is Pacific time. I'm on the Pacific coast, so this is Pacific time. It's that first hour after lunch on Tuesdays that the Russell has done well. And then this is Wednesdays for crude oil, level 3 trades. And you can see on Wednesday afternoon, or Wednesday mornings in particular, crude trades pretty darn well. So inventory day is pretty good for crude. that's really it in terms of results. Now, we talk about patterns and how we trade it. And so let me just kind of give you a brief look at it. I'm looking at some other stuff here on this. So what we do to set up our day, and trading the NQ long last few days has been pretty easy. Obviously, it's on a good run. But we had reason to believe that it would still be going up today, even as extended as it is. And the NQ is a nice example of how our patterns and how we measure them play out. Oops, I didn't want that daily chart. I messed that up, guys. Sorry. Supposed to be a 60-minute chart. No, it'll take a while to load. Plus, that's the ES, so let's do this. I wanted to show you the NQ. Actually, the ES will be fine. All right. So on this ES, what we want to look at is we had from this high to this low. We're going to call that high to A. Now there was an A, B, C inside of there, but at this point, I was kind of looking at it on a daily. So this would be a daily A level. Now when it pushed back up here, it was really strong. And usually what we will say is if price gets above the 786 resistance level, it's probably going to higher highs. And you can see the 786 was right here, and price pushed up even higher. And in fact, what it did was it went to a level that we don't usually look at, but we're aware of. And so we put in the 89% here, and you can see price came right to that 89% level. And then from there, price pushed down. And once it gapped down, that's obviously this support didn't hold on that move. So we have a C target. And we always can figure out a C target just by doing a reverse Fibonacci extension from B back to A, back to B. And here you can see we hit this 127% extension, labeling that C. And by our rules, that C then becomes a major A. And so when we get major A, we're going to look for major B up here. Normally, we would use that fib zone from 50% to the 786. I drew that a little bit off there. All right. To the 786 here. But remember back here we went to the 89%. So we want to look for and anticipate symmetry. So we put in this 89%, and guess where we are right here, right now, today. That's at symmetry B resistance of 89%. Everybody with me on that and how symmetry can play out? And PW, let me go back to your questions here, and we will go back to all the questions. I still use a 5-tick, and let me put up those results again, and I'll do it this way. These are level 3 trades here. We also have, here, I'll give you the most recent spreadsheet. Okay, this is the spreadsheet that I have to get updated here. Let's go out to the summary. So this is through the middle of last week. If we scroll up to the top of our spreadsheet here, you can see. So level 2s on the ES, level 3s. So a little bit lower win rate, but we have a 6-point target. So we stretch our target out a little bit on the ES because it moves so slow. And it doesn't chop around as much, so we can do that. NQs, we got to be a little more selective on our level 2s as we do on crude. But those can be some of our best trades. So that's where we are currently. So you can see total profits up here at 39 thousand since October 20th, with 33,000 on level threes total. It is broken down into the morning session. You can see in the morning sessions, the ES and the NQ do better in the morning than they do in the afternoon. Now the Russell, you have better win rates and better average trade in the afternoon than you do the morning. And that's also true of crude. You have a better win rate and a better average trade if you wait until after lunch. And it actually starts at the middle of afternoon session on this chart. Results start at 9:31 Pacific time, so midway through lunch is where we start the afternoon session. No, I don't prefer pre-market. This is actually, PW, this is the results beginning at U.S. market open and closing at U.S. market close, regular trading close. Not the futures market, but the regular market open and close. That's what these are based on. It's just the ES moves a lot slower. We're not scalping it as much. You know, we're in trades all day, a lot on the ES, and we don't, you know, it's rare that we get more than 2 entries on the ES, and we may get 15 or 20 on the NQ, for example. And the results, guys, are done manually, generally every day at the end of the day. I actually go back into the charts. So I would go back into the chart. On the ES today, we have no entries, and so there would be no trades. Back here was an entry, and I would just go like this. Entry was at 16 ticks, so it would be 0375, and I just figured out 0375. Did it get the 6 points? No, it went to 0775, and then it came back, so this one is going to end up being a loss right there. And then I tabulate the results. So I will do that for every valid signal. So it would be as if you took every single entry, you took the entry. And nobody does that, but that's the right way to do the results. Taking every trade. So I don't use Ninja backtesting. I don't use any backtesting. I enter them all manually, one trade at a time. And we've been keeping this spreadsheet, like I said, since October with all of the results in it. So we trade those markets. Now what we do works in any market on any time frame when we start talking about our wave analysis. So at this point on the ES, we would look at this and we go, well, this is B, symmetry resistance. Does that mean we short there? No. What it does mean is if we go long, we want only the best possible signals. We want to pull back into some kind of support before going long, because there's nothing yet that says the market is turning. So resistance is a condition, not an action, right? So support and resistance are condition words, not action words. Thanks again, Randy. Yeah, every morning we go through and we'll look at this wave and I'll go, okay, we're at, going into tomorrow, assuming the market closed, I'd say, okay, we're at symmetry, B resistance. Our bias is to the long side, but we are at resistance. So if I go long, I definitely want to go long from support. So I'm going to need something on a smaller time frame, like ABC structure, and then go long. And then I want to remember my all-time high is right there. That's resistance. So what could happen? I could pull back here. I could go up long, suck in new traders long as it breaks out, hit the previous all-time high, and then reverse hard. So that's why we have these patterns and these levels in advance. Now, if I get this move, and it comes down, and then it comes like this, and it comes to here, and if that happens to be 89% of that, that's the first place I'm thinking about going short. So By doing this every morning, we have our anticipation. So what would the pattern tell us about how to trade? Well, rule one, the market repeats itself until it doesn't. Okay? Market's going up. I anticipate that continues until it doesn't. Well, where will it stop? I don't know for sure, but here are places it might stop. Symmetry, 89% resistance. If it breaks out, sucks in new traders long. Previous high, resistance. Right. All that's done just to set up today. So going into tomorrow, say if I want to go long, I need that ABC structure. If I want to go short, I need that turn pattern I showed you. And that turn pattern might appear on this chart. This is where the smaller time frame, the higher time frame says that's resistance. And then the smaller time frame does this. Why is that not staying in draw mode? When the smaller time frame does this, now that's my buy, right? I got ABC structure, I'm inside this band, that's my buy. But what if it does this off the buy? I make my profit, it comes down here into the support. I'm thinking it's going to continue to go higher, but instead it comes to this little resistance and turns down. That's my turn pattern when it breaks there, and I'm coming this way. And then I'm measuring this level. I'm saying it's coming to here. So it's all about where we are in the patterns, and then do we get the signal here that matches here. Right? So I'm here, let's say I'm right here in this pattern looking for a long, and I get this signal right here at the same time, that's my entry. So it's the higher time frame that gives us the odds and the anticipation for what the market should do. Any questions on patterns, 1, 2, 3s, ABCs, any of that at this point? Good on that? Any symbols or anything anybody wants to look at and count waves in, we can do that. Randy, do you have the link to the room? I'm going to put it in here in a little bit. Let's look at this crude. Anybody know what crude's going to do over the next months? You want to look at bonds? We can do that. I might even have that loaded. Oh, I don't want to use that chart though. I don't want to mess up my crude chart. Let's use this chart. ZB. Do you have a time frame or an outlook KW that you're looking at or anticipating? Crude, yeah, crude's selling off a little bit here. Crude's actually at a key level. These daily charts take a long time to load for some reason. You're looking at a 10-minute. You want to look at the bonds on a 10-minute. All right. Get that crude chart out of the way. Okay. I'm going to look at them at 10-minute, but remember, it's always on the backdrop of a higher time frame. So first thing I'm going to notice on this 10-minute, I'm thinking this is a downtrend. We're pulling up to resistance, so the question becomes, how's it getting to resistance? What is that line back under there? I don't know. So let's scrunch this up a little bit. So where is resistance here? We're in a downtrend. And then how is it getting to that level? So the first thing I'm going to note is we're now at 50% resistance. So I'm going to have to start being careful to the long side. And then I'm going to note, how did we get there? Well, it's not one wave. We have multiple waves. This could be A, B, C. So if this is A and this is B, I'm going to look at that and say, that's C. That make sense? Now, if that's C, so let's go ahead and label that. Here's A. If this is C, it is also now major A. And we anticipate that it repeats itself. And so we're going to come down for B. Now B, major B, is in this zone, which we didn't get to. And then we've gone higher. So what that tells me is maybe this is not ABC. Maybe it's 1, 2. Maybe this is 2. So how do I find that out? What's the difference? The difference is we use that same Fibonacci extension tool, which is F9, because I always just hotkey it. So we're going to use this extension tool, F9. And we're going to forward project our waves. So if this is not C and it's 2, I'm going to go from the low up to what I think is 1, we used to think was A, and then I'm going to forward project. And it turns out, well, maybe that is 2 instead, just because of the way this pattern worked out. If this is 2, we may not get a pullback all the way into the entire ABC. What we may get is first we might get a pullback just of wave 2, which you see we did not get into the zone. Or we may get, after wave 2, if it is wave 2, that's where you get things like bear flags or wedges or multiple ABCs. You get more complex corrections. Now, which is what we've got here. We got a bull flag and we've taken off. Now we do set targets. And if this is 2, our target for 3 is going to be a forward projection of 2. And for wave 3, we use the 127% projection here. So our ABC has just shifted into a 1, 2, 3. Everybody see that? That makes sense, KW? So if I'm going long crude here, I'm going to be pretty darn careful because that's resistance. So if I want to go long, I'm going to make sure I'm doing it from some level of support before going long, especially since that's the target. But the other thing that happens is now this is 1, 2, and this is where you got to watch it every day in the market and draw these yourself. 1, 2, 3. But just as that first C becomes major A, this first 3 now becomes major 1, and it's a 1, 2, 3. So now I'm going to anticipate first we correct the entire 1, 2, 3 into this zone, and then I'm going to project major 2 is here. And that is our major 2. So these patterns just repeat themselves until they don't. We also know, and we trade crude a little differently because crude likes to come to the 786 level. For whatever reason, crude goes at 786 a lot. Take the drawing tool off of here. I don't want to get rid of, yeah, get rid of all those. Ellipse text. Yeah, I'm okay. I'll get rid of all that. So when we watch crude, we don't anticipate what are all those extra lines that this 786 or 618 necessarily holds. Price likes to come down to the 786, even on this move here, 786. So crude gets a little more extended. That comes with experience and all of that good stuff. And that's really the basics without going into a lot of detail. Always, the KW on the back of that, right? There's reasons for that. Look at the higher time frame. Wow, can you guys hear that? That's some heavy metal, something banging around outside. I don't know why it's so slow. But the higher time frame always wins. If you're, playing a 60-minute chart to the short side, know where your daily supports are. If you're playing a daily wave to the short side, know where your weekly supports are. And I don't know why this is taking so long to load here. So bonds are obviously quite strong. What are all those extra lines that are getting in my way? I can't click here without some line popping up. Get rid of these indicators. All right, now I can move it. So always look at your higher time frame. I think this was a pretty important key daily support here on this last wave. 618. So anticipate that it wants to come back up into resistance before going lower. It's kind of consolidating here. Looks like on this daily chart from the high, you got wave, and then a big extension down. So this looks like a one, really extended wave two. So not only did you have 618 here, you had this projected wave three right in this zone. So there's a reason for price to really consolidate in this area. Oh, you having a hard time seeing the lines and whatnot? Sorry about that, Richard. Can you see the bars all right? So guys, that's really it. Let me put in, and I think Yana has for a, you can see the bars okay? All right. Has a link, and I can put it in here real quick to our, we do have an offer. For some reason, my bookmarks are not showing up. There it is. Thank you, Yana. And what we're going to do with this trial, guys, is because what we do, we can't cover this in an hour. We're going to open up the room next week, Monday through Thursday, and then the following week, Monday and Tuesday, and then I'm going to go on vacation for a week, to visitors and for a trial. So if you sign up at that link, I will send you later this evening, sign up today, the link for our live room, and I will send you the indicators and the zip files you need to get started and load charts onto your platform. And I'll also send you a document on trading the X90 Wave Rider. And I did write for Trading Pub a while back in one of their ebooks, a short article on day trading made simple. With Yana's permission, I will send you a copy of that also. And I will put that in an email to you later this evening. That will allow you to get everything set up. I will need your machine ID number to license the trial for the wrinkle bars. They're on a separate server. If you've had a previous trial with us, then I will need your machine ID to license the X90 also. If you've never had a trial with us, that trial license should happen automatically. But once you've used that machine once, it holds it in memory, so I'll have to do it. Thank you, Randy. This is a good offer, guys. This is worth doing. We're a small group. On any given day, there might only be one other person in the room, and there might be 10. But we're pretty consistent in what happens. And it is really live action where you'll see how all of this comes into play. So I'd encourage you to do that. I encourage you to listen to the remaining speakers. I've seen just about everything everyone does here, guys, and it's all really good stuff. The thing that we're doing here is we're trying to make everything really, really simple. You'll notice on our charts, we don't have extra panels. The only thing we have on there really are the things we put in to try and simplify it. Our rules for entry are very simple, and we'll talk about how to manage positions as we're trading during the day. But guys, I really appreciate y'all hanging in there with me with the rough start. I know we're a little disjointed, but come on in and join us. We have a pretty good time, even if it's just me and one other person, which happens occasionally, but even if there's only 3 or 4 of us in the room on any given day, it works out pretty well. And with that, Jana, if you're taking it back, or Raleigh or whoever, I'll turn it back over to you. Oh, let me put up real quick my contact information again for you. Yeah, let's see here. Yeah, that should give it to you. Yeah, it's not giving it to you. Okay, I won't put up my contact. There we go. This will work. There you go. And with that, I'll turn it back to you, Jana.